Well, to give us more insight into cotton prices, I'm joined now by Kona Haque. She's Head of Agricultural Research at Macquarie Bank. Thanks very much indeed for speaking to us. So tell us more about what is driving up the price of cotton.
Well, the global cotton market is in a structural deficit. It actually has been so for the last 5 years now. So the fundamentals are very constructive. We've actually been fairly bullish on the cotton prices for a while on the back of this deficit.
Right, so as we heard there, some of the greatest demand is coming from emerging markets, as you would expect, more specifically China.
Oh, absolutely. Basically, after 2008, everything was seemingly fine, with demand actually fell quite sharply because of the recession. But now that the global economic recession seems to have abated and things are looking a little bit up, albeit a bit shakily, what's happened is that textile demand started to boom, and nowhere more than in China. So China's been ramping up imports. Mills have been very, very busy. They can't get enough orders. The same situation is in India as well. So as a result, they've been importing a lot, but unfortunately the rest of the world, they've been basically reducing their planted acreage towards cotton. At least up until this year, planted acreage for cotton has been falling quite sharply across the world.
So we're seeing consumption exploding at a time when stockpiles are not particularly healthy?
Exactly. Really, the consumption is more about restocking, because during the recession they had just got rid of it. They had run down inventories to very minimal levels. The international, the ICE exchange, the certified stocks for cotton are at levels not seen since 2004, and basically we're at a critical level, and we need to really wait for this new harvest that are going to be coming in at least in the US in the August-September period before you can see any kind of relief coming on board.
So we saw purging during the recession, and now people are trying to rebuild their inventories, if you like. So what does this mean? What are the potential implications for meeting global demand for cotton?
Well, we're beginning to see some response already from the producers around the world. The US alone will be looking to see an increased harvest of about 52% this year, and that should be starting to come on board in the next few weeks, actually. So that'll be a big improvement. We're also seeing some production growth in Australia, Brazil, Turkey, and some of the other major producers. But again, it takes some time, and until then we're at a fairly tight level.
And of course, high prices in cotton has an impact on companies. We were hearing there about the likes of Levi Strauss, Hans brand, which makes Hans underwear, and the Wonder Bra. They've seen costs surge. What does that ultimately mean for consumers?
Well, inevitably, if they wish to pass this price on to the consumers, that means expensive clothes for us. I mean, a little bit more expensive compared to what we were used to. It already depends on how well these companies are hedged, because if they've already hedged well their cotton import purchases, then maybe they might be okay. But the surge has been quite sharp, so it could be that some costs may have to be passed on.
Thanks very much, Kona Haque. Appreciate your time.